So let's begin income from salaries revision for May 25 attempt related onwards. We are going to discuss completely from the amended book. So specifically no discussion for amendments is required. When I am discussing rent-free accommodation perquisite valuation here, I will discuss what amendment happened. And there is 115 BAC standard deduction related amendment. Those who are following default tax regime, for them standard deduction is 75,000. Those who are not following default tax regime, the standard deduction is 50,000. Means optional tax regime 50,000 standard deduction, default tax regime 75,000. This is the major amendment. RFA is one amendment. This is one more amendment. That's it. There is no other amendment in salary. First, let us revise the salaries in a particular order where I will avoid 99% of the confusion that you have. Remember, this is a revision class. This is not a regular class. Getting it? But I will give you 99%. Entire vagueness will be removed. Those who have done a preparation of salaries already, you watch this revision, you get complete clarity on the salary. Now, you see, what are the various types of salaries? First of all, salary chapter, what are the various incomes covered for us? Now, we have something called 17 subsection 1. Salary means what? In this, the observation points are salary includes contribution to recognized provident fund. Salary includes interest on recognized provident fund. Salary includes allowances. Getting it? Salary includes perquisites. Salary includes profit in lieu of salary. Now, perquisite means what? Again, it is defined under 17 subsection 2. Perquisites includes two types of perquisites. One is monetary perquisites. Most of the students don't understand the salary overview. Lack of overview on the salary is what making them confusion on the salary. Perquisite, monetary perquisite. This is nothing but reimbursements. This is nothing but what? Reimbursements. Reimbursements are different. Allowances are different. Reimbursement is different, allowance is different. The basic difference is very simple. Allowance is given to you, the money will be given, medical allowance is given. Whether you will use it for medical purpose or not, we don't know. That's irrelevant for us. Whereas reimbursement, first you will go spend money and give me the bill, company will reimburse, or direct payment by company, employer. The employer is directly paying the third party. Are you getting the point? Both are treated as monetary perquisites. They are not treated as allowances. Allowance means what? Cash is given to you. Whether you will spend it or not, I will not ask. Are you getting it? Reimbursement means what? I will reimburse based on the bill, or I will directly pay to the third party. That is reimbursement. Then perquisite can be another variety, that is non-monetary perquisite. What is a non-monetary perquisite? Best example, rent-free accommodation, motor car, use of movable assets. Like there are plenty of non-monetary benefits were there, which we will be discussing. So how to tax this non-monetary perquisites? There is a perquisite valuation rule called rule number 3. Accordingly, we need to value those perquisites. Okay, don't worry, we will discuss it from the book itself. Just I'm giving you overview. Then we have another section called 17 subsection 3, profit in lieu of salary. Nothing but compensation received by employee on termination, that and all taxable under profit in lieu of salary. But still, since the amount is received from employer, because of employer and employee relationship, that profit in lieu of salary, the amount that you are getting instead of salary, that is also taxable under salary, because you are having employer-employee relationship. Remember, any income that is taxable under salary only if the recipient and payer, they have employee-employer relationship and the amount is received because of this relationship, then only that is covered under salary. Clear or not? Next, for example, no, employee has a own house. This house is rented to employer. This house is rented to employer. I am getting rental income from the company for the house which I rented. Though we are employer and employee, the transaction is not because of employment. The rent amount which I am getting, no, from the employer for the renting of house, that is still taxable under house property only. Are you getting the point? Then Then, so look at what are the points that are there in the salaries. So first thing is employer-employee relationship is must. The next one is what? Charging section. What is the basis for salary? We all know salary is taxable on due basis or receipt basis, whichever is earlier. Due. Suppose no April month salary. Suppose we are doing financial year 1st April 2024 to 31st March 2025. This is the year for which the problems will be coming for us. Okay, 1st April month salary is due to me on 1st May. May month salary is due to me on 1st June. March month salary is due to me on next year. In the 24-25 year, how many due dates will come? 12 due dates. In 24-25 year, how many due dates will come? 12. First due date will be 1st April 2024. But 1st April 2024, the amount I receive, no, that is last year March month. Still, since it is due on 1st April, the due date comes under 24-25 year. Even though it is last year March month salary, still it is taxable in the current year. Remember, under income from salary, the income is taxed on due basis or receipt basis, whichever is earlier. Suppose I am at the last month, March. I am in certain urgent need of funds. I requested my employer, dear employer, next year April and May I have salary, right? I will receive, right? Can you pay me now itself? I asked. Before due date I am asking. Company paid it. This is called as advance salary. Advance salary, you received it before it became due. Since you received it before it became due, it is taxable. So salary is taxable on due basis, if at all not yet received. Or if you already received before it become due, then receipt basis, whichever is earlier. That's how the charging section. Then sometimes you will also receive arrears of salary information in the exam. Suppose in the question, arrears of salary received point they gave, don't tax it. We assume that this amount is already taxed on due basis in the earlier years. We assume that this amount is already taxed on due basis in the earlier years. Suppose in the question in the exam they told arrears of salary bracket not taxed earlier. Now it is taxable for you. Suppose if the question is silent, arrears of salary, no point is mentioned. Earlier we assume that it is already taxed. Now already once again you are receiving, it is not taxable. The point is very simple. If an income is already taxed on due basis, subsequently when you receive it, once again it is not taxable. Or if salary is already taxed on receipt basis, subsequently when it become due actually, it is once again not taxable. Clear or not? Yes or no? Advance against salary and loan, both are different from advance salary. Advance against salary, loan, these both are treated as loan taken from company. Getting it? On that, perquisite valuation is there. They are not liable for taxation. Clear or not? Next, what is a salary? Salary includes wages, pension, gratuity, fees, commission, perquisite, PLU, advance salary, leave salary, provident fund. And remember, salary is an inclusive definition. Allowances and all will come under salary definition. Now, what are various types of allowances? Also, one more point I want to tell you. Provident fund contribution, that is also salary. Contribution by government or contribution by private employer, some other employer, to the employee account in the pension scheme 80CCD. For the employee, first it should be taxed. Then employee, when he is computing total income under optional tax regime, getting it, he can claim deduction for employer contribution. Getting it? That anyhow, we will once again touch it in the chapter 6A deduction. Same way, if Agniveer, central government is contributing in the name of Agniveer employee to Agniveer Corpus Fund, for him it is a benefit, therefore it is treated as salary. So pension amount paid to pension fund, amount paid to provident fund, amount paid to Agniveer Corpus Fund by employer is taxed as salary. However, provident fund, no, it is exempted up to 12% of salary. Amount contributed to recognized provident fund is exempt up to 12% of salary. I will discuss under provident fund taxation little while later. Clear until now? Salary definition, basics. No much thing in this. There is no major thing in this to remember. Allowances. There are allowances. Now coming to, when you come to allowances, there is a huge amount of confusion. Which allowances are taxable to employee under optional tax regime? Which allowances are exempt under optional tax regime? Which allowances are taxable under default tax regime? So confusion. Ignore all that. I will give you one simple diagram. Look at the allowances. Allowances are given for very simple official purpose, or allowances are given for personal purpose. Allowances are given for what purpose? Either official or allowances are given for personal purpose. Official allowances are, they are exempted. They are exempted. Whether it is optional tax regime or default tax regime, doesn't matter. Expenses given for official purpose. Don't worry, I will tell you what is official purpose allowance. I will give you example also. Allowances given for official purpose are straight away exempted, whether it is optional tax regime or default tax regime. How much is exempted? How much is spent, that much is exempt. Sir, I got 10,000 allowance official, sir, but I spent 8,000 rupees only, sir. 2,000 rupees is taxable, whether it is default tax or optional tax, doesn't matter. Sir, I got 10,000 allowance, sir, I spent full 10,000 for official purpose, sir. Nothing is there, no benefit is there, fully exempted. Now, what do you mean by official allowances? Official allowances are, example, conveyance allowance, traveling allowance, daily allowance, uniform allowance, helper allowance, research allowance. These are the allowances which are actually called as official allowances. These are allowances which are called as official, or any other allowance given exclusively for official purpose or business purpose of the employer. Now these allowances, how much exempted? Whatever you spend, that much is exempted. No difference between optional tax regime, no difference between default tax regime. Remember, I am talking about allowance. Immediately some students might think, sir, meals is exempt up to 50 rupees. No, meal is not allowance, it's a perquisite. I will come to perquisite valuation, that time I will tell you. Many think that meal. Remember, food allowance. Suppose if a company is giving food allowance, that is fully taxable. Food voucher they are giving, food facility they are giving, up to 50 per meal is exempted, that too under default tax regime only. That I will discuss in perquisite valuation rules, because food, meals and all is a, this thing, what, a perquisite. Now these are the tax treatment for official allowances. Remaining allowances all are called as what? Personal. Only one personal allowance is exempt. Whether optional tax regime or default tax regime, there is only one allowance which is personal in nature. Transportation allowance. What is it? Transportation allowance given to blind, dumb, deaf, disabled person. Getting it? Any allowance given to blind, dumb, deaf, disabled person, that to which allowance it is? Transportation allowance. Immediately you might get it out. Sir, what is the difference between conveyance allowance, traveling allowance, transport allowance? That also will tell you. Getting it? Traveling allowance, if the word is given, that is official purpose. Conveyance, official purpose. Transport, personal purpose. Transportation allowance given to an employee, whether optional tax regime or default tax regime, fully taxable. However, a dumb, blind, deaf, disabled employee can claim exemption up to 3,200 per month. Can claim exemption up to 3,200 rupees per month. So an employee who is covered under blind, dumb, deaf category, disabled category, they can claim exemption up to 3,200 per month. Which allowance? Transportation. Suppose I am not coming under blind, dumb, deaf, disabled category, I will not have any exemption. Fully taxable. Sir, I got some other personal allowance. I got some other personal. What allowance? Leave it. I got some other personal allowance, sir. Always taxable fully under default tax regime. Always taxable fully under default tax regime. Any allowance except transport allowance. Any allowance except transport allowance. Transport allowance also for whom? That too disabled employee. For him only 3,200. If transport allowance is received by any other employee, it is fully taxable. Able to recollect everybody. Yes or no? Now there is another allowance which is fully exempt under both the regimes. There is only one allowance which is always exempt in the both the regimes. Fully exempt. That's personal actually, but fully exempt. Perquisites or allowances granted to Indian citizen by Government of India. Perquisites or allowances granted to Indian citizen by Government of India for services rendered outside India. 10 subsection 7. This allowance is always exempt. This allowance is always exempt. So allowances given to outside India to Indian citizen by Government of India for services rendered outside India, fully exempt. Remember, this exemption is available only if the government is paying perquisite or allowance to Indian citizen. That is only exempt. Salary is not exempted. Remember, Salary is not exempted. Only perquisite is exempted. Allowance is exempted. Salary is not exempted. Able to understand? Salary is deemed to be received in India. It is fully taxable. Deemed to accrue from India. It is fully taxable. This is 10 subsection 7. Are you confident until now? Now, sir, still little bit of confusion. This element is taxable here, that element is taxable here, all that. So for that I gave you at the end of this salaries chapter one simple table. I gave you at the end of this chapter a simple table. Just a minute. So coming to the end of the salaries chapter, very simple. Summary of deductions. Summary of deductions or exemptions not allowed under default tax. If you are going for default tax regime, these benefits are not allowed. What are they? All, exemptions for free food voucher up to 50 per meal, no deduction. Entertainment allowance and profession tax, no deduction. Special allowances for personal use are always taxable. However, transport allowance for differently abled people, 3,200 is exempt. HRA, no deduction under default tax. Leave travel, no exemption. Rent-free residence to judges of Supreme Court, High Court, no benefit under default tax. Allowances for judges' salaries and pensions paid by UNO, no benefit under default tax. These benefits, under optional tax regime have some exemptions. That exemptions is what we are now going to discuss. Clear? So what is there in default tax regime? What is there in optional tax regime? And the salaries, nothing to worry. No need to even remember like whatever I told just 5 minutes before. You can directly say allowances for judges and Supreme Courts, all that. Is it allowable? Default tax regime not allowed. Optional tax regime allowed. Rent-free official residence to judge. Optional tax regime exempt. Default tax regime taxable. Leave travel concession, optional tax regime, some exemption is there. Default tax regime fully taxable. HRA, optional tax regime, some exemption is there. Default tax regime fully taxable. Special allowances for personal purpose, always taxable. Yes or no? Under default tax regime. Whereas in optional tax regime, education allowance 100 per month, hostel allowance 300 per month, like that some exemptions and all were there. Whereas transportation for differently abled people, whether it is optional tax regime or default tax regime, up to 3,200 rupees per month is exempted. Entertainment and profession tax deductions under section 16, you can claim only under optional tax regime, no deduction for default tax regime. Exemption for free food voucher up to 50 per meal, no deduction in default tax regime, only under optional up to 50 per meal is exempted. That's it. Under salaries, a single screenshot like this is enough. That's it. If you remember this, you remember what is default tax regime, what is optional tax regime, and the income from salaries. Clear, all of you? Now let's look at some important allowances and memory part of it. Important allowances. I told, right, allowances are two types: official and personal purpose. Okay, official purpose allowance means what? Helper, research allowance, uniform allowance, all that. Traveling allowance, daily allowance, conveyance. Conveyance allowance means what? On office purpose, you are roaming within the city. Okay, cab charges, auto charges, all that is conveyance. On office purpose, you want to travel to another city or another country, that is traveling allowance. Transport allowance means what? That's a personal allowance. That is for traveling between office to home. That is always taxable. For differently abled person, up to 3,200 exempt under both default tax regime and optional tax regime. That's it. Clear or not? Next. Now personal allowances, they are always taxable, right? In the tribal area allowance, 200 per month exempted. Remember that. Transport allowance given to transport sector employee. How much allowance you received? Check out. Flat 70% exempt. Flat, how much is exempted? 70%. However, maximum exemption per month cannot exceed 10,000. The same is expressed in the book as what? Lower of 70% of the allowance received or maximum 10,000 per month, whichever is lower, that is exempted. Nothing but transport allowance, employee given in transport sector, they will give you 10,000 monthly received. Many students will straight away claim 10,000 exemption. No, 70% only exempted, or 10,000 per month, whichever is lower. Then education allowance 100 per month per child up to 2 children. Hostel allowance per children 300 per month per child up to 2 children. This much only exempted. Are you clear? Next, any other allowance in this, no need to remember. No need to remember. Sir, allowances were given to disabled, differently abled people, sir. Under both the regimes, 3,200 per month is exempted. But remember, under optional, transport allowance received by some other employee who is not a disabled person, always taxable. Now High Court, Supreme Court judges allowances fully exempt under default tax regime. Allowances to United Nations Organization employees, fully exempt under optional tax regime. These are the allowances which are exempt only under OTR, but not in DTR. That's what I already told. Yes or no? Next. Allowances payable outside India to Indian citizen, exempt under both the regime, irrespective of tax regime, it is exempted. Now let's come to some discussions on pension. Pension is categorized into two types. One is uncommuted, which is actually called as monthly pension. Remember, pension received on retirement only I am discussing. If pension is received before retirement, fully taxable, always taxable, except disability pension. Received by armed force employee. Disability pension received by armed forces employee is fully exempt. But any other pension received during service, fully taxable. On retirement I am receiving, on or after retirement I am receiving, then the pension is divided into two categories. Are you receiving on a monthly basis? Yes, fully taxable. Sir, I am receiving lump sum, sir. Commuted pension I am getting. Commuted pension means what? Very simple. Suppose originally company offered you 10,000 rupees per month monthly pension, or 5,000 monthly pension, 5 lakhs lump sum cash. You chosen this option, not this option. Indirectly, monthly how much you sacrificed? 50% you sacrificed. Originally they offered how much? 10,000. But you asked the company how much? 5,000, you pay me monthly enough. Instead of 5,000 which you are sacrificing, no, which is nothing but in the monthly, how much percentage you are sacrificing? 50% you are sacrificing in the monthly pension. For 50% sacrifice of the monthly pension, you are receiving lump sum how much? 5 lakh. Tell me, full pension value is how much? Full value is how much? 50% is equal to 5 lakh. 100% is full value is equal to 10 lakh. That's it. So first compute full pension value. In exam they will give you commutation percentage. How much commuted pension you receive they will tell you. Sometimes they will tell you uncommuted pension before commutation amount they will give you. Uncommuted pension after commutation they will give you. Percentage you calculate. Lump sum amount they will give you. That lump sum amount is equal to this percentage. 100% is equal to how much you should calculate. Are you getting it? Clear or not? No, sir, commuted, sir, lump sum amount I received, sir. Government employee, fully exempted. Non-government employee, check whether they are receiving gratuity or not. Sir, non-government employee, sir, he is receiving gratuity also, sir. He is receiving gratuity. See, I am not talking about are they covered under Gratuity Act or not. I am not talking about Act coverage. I am talking about are they received or not. Yes, sir, they are received, which means they are claiming exemption for gratuity also. Which means under commuted pension exemption is lower. How much is exempted? Commuted pension received, how much you calculate? Based upon this full pension value you calculate. What is full pension value? Commuted pension received how much? What is commuted percentage? Check it out. You will get full pension value. In our example, commuted pension received 5 lakh. 50%. Full pension value how much? 10 lakh. So how much are received here? 5 lakhs are received. Minus 1/3 of full value. 1/3 means what? For full value, 10 lakhs into 1/3 means what? 3.33. So how much is exempt? How much is taxable? 1.66 lakh is taxable. Next, sir, I am not receiving gratuity, sir. Then half of full pension value. Half of full pension value is equal to how much? 5 lakh. How much are received? 5 lakh. Minus how much is exempted? 5 lakh. Taxable is 0. You should always compute. First, commuted pension received how much? Put in the amount column. Less exemption. 1/3 of full pension value, not 1/3 of received. 1/3 of full value. Full value you should compute. Sometimes if you're lucky enough in the exam, they'll give you that full value also. Clear? That's it. Pension is over. And I told you, disability pension granted to disabled person of armed forces, they are always exempted. Getting it? Okay, persons who retired normally is not exempt. Persons who are received because of disability during the service also it is exempted. That's it. Correct? Sometimes no pension may be received by family members. If family members are receiving the pension, that is taxable under income from other sources. Okay, that's it. Anyhow, that's it. Pension point is majorly over. Now let's look at gratuity. Now let's look at what? Gratuity. Gratuity again. If you receive gratuity on service, means you didn't retire yet, fully taxable. Gratuity received before service is fully taxable. Just 1 minute. Yes, let's continue. Gratuity. Gratuity received before retirement is always taxable. It is treated at par with allowance. Remember, gratuity received before retirement, pension received before retirement, uncommuted pension received before retirement, they are all treated at par with allowance. When I say at par with allowance, you should consider that in RFA salary computation purpose. RFA salary computation. For example, in September 24 exams, leave encashment is received during service, before retirement. It is treated as allowance and it is considered in RFA salary computation purpose. Remember? Fine. Sir, I received gratuity on retirement, sir. Very simple. You are a government employee. You are a government employee, fully exempt. Non-government, I mean, you received during service, fully taxable. Government employee received on retirement or death, fully exempt. Remember, if it is received during the service, whether it is government or non-government, are fully taxable. Sir, if the gratuity is received by other employee, if the gratuity is received from by other employee, check whether that employee is covered under the Payment of Gratuity Act or not. An employee drawing a salary so and so amount, some limit is there, only they are covered under Gratuity Act. Check whether the employee is covered under Gratuity Act or not. Yes sir, he is covered under Gratuity Act. Then calculate, first identify how much amount received. Sir, he received some 15 lakh rupees, sir. First identify how much amount he received. Okay. From that, exemption is as below. How much is exempted? Least of the following. Statutory limit under income tax is 20 lakh. Maximum exemption cannot exceed 20. Maximum amount cannot exceed even 15 lakhs, right? How much amount you received? 15. That cannot exceed, right? Gratuity limit under Gratuity Act. How much is the limit? 15 by 26 into completed years of service or part thereof in excess of 6 months. What does it mean? Suppose no employee retired after 26 years 8 months, it is treated as 27. Sir, employee retired after 26 years 2 months, sir, then it is treated as 26. Sir, employee retired after 26 years 11 months 9 days, it is still treated as 27. Suppose if act is not applicable, there you see only completed years of service is used. They didn't use part thereof in excess of 6 months. So, sir, I am an employee, completed 26 years, sir, 11 months, sir, 20 days I worked, sir. Still it is treated as 26. If act is applicable, 27. If act is not applicable, completed years means 26. Are you clear? Now, how much is exempted? 15 by 26 into completed years or part thereof in excess of 6 months multiplied by last drawn salary. Last drawn salary means what? At the time of retirement, what is your salary? Salary means what? Salary means what? Here we have given. Salary means what? Where Gratuity Act is applicable, salary definition is different. If Gratuity Act is not applicable, salary definition is different. If Act is applicable, for that employee, 15 by 26 into completed years or part thereof in excess of 6 months into last on salary is there, right? Their salary means what? Basic plus any DA. Whether for retirement or not for retirement are irrelevant. In exam, if they mention the DA, they didn't mention anything. We assume that it is not for retirement. Specifically, they mentioned something is for retirement. Then only we will consider. Clear? So, 15 by 26 into, in our example, 27 years into last run salary, you will get some amount, compute it. So, this amount you know, whichever is lower, that amount will be reduced from this. Balance amount is taxable. This is to be added to gross salary computation. Easy or not? Yes, next. Sir, employee, he is not covered under the Gratuity Act, sir. Every criteria is same. Exemption provision is same. Least of the following only exempted. One criteria is different. It's not 15 by 26. Here it is 15 by 30. Actually, in the ICA book, 1 by 2 they will use. Half only they will use. But in order for you to get a clear-cut distinction, I told 15 by 30 multiplied by completed years multiplied by average salary. Not last drawn salary. Average salary means what? Average of last 10 months salary preceding month of retirement. Okay. Now, last 10 months average you should take. What you should take in averaging? You should take 3 components. You should take basic of last 10 months, total it. DA for retirement purpose in the last 10 months, total it. Commission percentage of total last 10 months proportionately how much it is calculated. Remember, fixed commission should not be considered. Only commission percentage of turnover should be considered. Total it. 10 months you total it divided by 10 is equal to, you will get average salary. That's it. And remember, the lifetime exemption limit is restricted to 20 lakh. Suppose no, in the question they might give you gratuity received. Earlier employee got exemption for 5 lakhs. Now here statutory limit is there not 20. That should be adjusted by 5 lakh. Means 15 lakh only you should consider lifetime. Whether you are receiving from one employer or multiple employer, whether you are receiving in 1 year or multiple years, you are receiving on retirement. Exemption is maximum 20 lakhs throughout the lifetime of the SSC. Clear or not? All of you. Next, when I am discussing RFA, at that time I will discuss HRA. Okay, HRA I didn't discuss. I will discuss at the time of RFA. Next, leave encashment. Leave encashment again. Remember, leave encashment received during service is fully taxable. On retirement I am receiving, sir. That time government employee fully exempted. Yes or no? Sir, non-government employee. Then 4 criterias were given. 4 criterias were given. So 25 lakh. Leave salary actually received. Remember, gratuity it is 20. Leave encashment it is 25 lakh. 10 months into average salary, 1 criteria. 4th criteria, cash equivalent of unavailed leave to the credit at the time of retirement. Earned leave entitlement cannot exceed 30 days every year. This is the point where every student will do wrong. For this, best way to understand this 4th point is what? Let us convert this 4th point into a formula. What is the formula? You know, look in the problem, they will give you completed years of service. Take that. Part thereof in excess of 6 months. Don't consider. Only completed years you take. Multiplied by per annum how many leaves employee eligible. Look at per annum company policy. What is it? Check out. Or 30 days. Whichever is lower. Yes or no? This is one bracket. Correct? Minus leaves utilized how much? Leaves utilized by employee throughout that number of years in service. How much? Calculate. Divided by 30 multiplied by average salary. So first numerator you should compute. What we are computing in numerator? We are simply computing, you know, we are simply computing unavailed leave. Unavailed leave means what? Unutilized leave. How to calculate unutilized leave? Total leave how much minus utilized leave how much is equal to unutilized. Total leave is how to calculate? Per annum total leave cannot exceed 30 days. Eligible leaves per annum should not exceed 30. That's what they're saying. Earned leave entitlement cannot exceed 30 days for every year of service. So per annum, how many maximum leaves? 30. Suppose company policy 45 days, but you can only take 30. Sir, I completed 20 years, sir. Company policy 45 days, sir. No, that is not considered. 30 only considered. So total leaves eligible how much? 600 days. Correct? Sir, in those 20 years, no, I already used 450 days leaves, sir. Leaves utilized, actual information you take. In the question they will give you mostly. So unutilized leave is how much? 150. Now what is the 4th criteria? 150 by 30 into average salary. That's it. If you understand this point, leave encashment, you can never do mistake. This is how you should understand leave encashment. Are you clear? Suppose, no, sir, if the company policy itself is 20, sir, then 20 or 30, whichever is lower, 20. 20 into 20, 40. Already you took 450 leaves, sir. No leave encashment exemption, 0 exemption. Clear or not? Everybody got communicated clearly whatever we discussed in depth without any confusion? Yes. Yes. Next, now here also average salary used. Average salary means what? Last 10 months salary preceding the date of retirement. Here they used date of retirement. In gratuity, where gratuity act is not applicable, month of retirement they used. Now salary means what? Same, basic plus DA for retirement plus commission percentage of turnover. Now immediately you might get, sir, somewhere at gratuity, where gratuity act is applicable, basic salary means basic plus any DA. At this one, leave encashment, gratuity where act is not applicable, HRA, there are various other. There again salary is different. Different places, different salary definition is there. How to remember that? Very simple. At the end of this chapter, we gave one schedule. We gave one simple table. At the end of this chapter, we gave one table. Key observations under salaries. Meaning of salary for various purpose. You see, for gratuity, where act is applicable, basic plus any DA. For RPF contribution, VRS, gratuity, leave encashment, which gratuity, by the way, act is not applicable, HRA. In all these cases, if the word salary comes, salary means what? Basic, DA for retirement plus commission percentage of turnover. Sir, suppose if it is a rent-free accommodation, what is salary? Basic plus DA for retirement plus any commission, any bonus, taxable portion of allowances. only allowances, not reimbursements. Perquisite should not be considered in this. In salary definition, for RFA purpose, perquisite should not be considered. Only salary, basic plus DA for retirement plus all types of allowances. Only taxable portion shall be considered. Under default tax regime, taxable portions will be mainly whole. Under optional tax regime, taxable portion will be proportionate. Able to understand? All of you. That's it. That's it. With this, leave encashment is also over. Leave encashment is over. Clear? Just a minute. Then coming to Provident Fund. Provident Fund is one of the toughest thing in the entire salaries topic. Very simple, I will tell you. Okay, contributions by central government to their employees is SPF. Employer contribution fully exempt. Employee contribution we are collecting and paying. What is the tax treatment for him? He will claim 80C deduction. Chapter 6 here, that too under optional tax regime. Employers, interest will be given on the contribution, fully exempt for government employee. Later he withdrawn lump sum amount, fully exempted. Correct? Then recognized provident fund. Next one is RPF. This is for private sector, not government companies, private sector. For them, no, employer contribution is taxable in the hands of employee in excess of 12% of salary. Up to 12% of salary exempted. Salary means what? Basic plus DA for retirement plus commission percentage of turnover. 12% of salary is exempted. Beyond 12% it is taxable. Beyond 12% of salary it is taxable. That too. Employee contribution also will be there, right? RPF, that he can claim it as deduction under ATC in optional tax regime. Sir, interest is paid by employer, sir. Up to 9.5% per annum. Interest rate up to 9.5% per annum is exempted. However, from 2021 onwards, if at all employee contribution in a year is more than 2.5 lakh, beyond 2.5 lakh, very simple. Look at this, employer contribution, employee contribution. Employer contribution is exempt up to how much? Principal 12% of salary. Employee contribution 80C deduction under optional tax regime. Now we are paying interest. Interest is exempted how much? 9.5% per annum. Extra interest is fully taxable. Employee contribution is also exempt up to how much? 9.5. But employee contribution we should split. How much is employee contribution? First identify, sir. Employee contribution is 5 lakhs, sir, per annum. This year came. Then on first 2.5 lakh. 9.5% is exempt. Beyond that is taxable. On the balance 2.5 lakh, in the 5 lakh, no, balance 2.5 lakh, entire interest is taxable. Entire interest is taxable. Suppose no RPF is there. Inside that, employer is not giving any contribution, but employee voluntarily contributing. Then the limit is treated as 5 lakhs. Are you clear? Everybody. So that's why what they will do for the purpose of RPF. Separate accounts will be maintained for taxable portion and non-taxable portion. So taxable portion means up to 2.5 lakh, sorry, beyond 2.5 lakh, any contribution is there from employee, that amount will be credited to taxable portion account. On that, whatever interest is credited, fully taxable. Non-taxable portion will be there. On that, interest credited up to 9.5% is exempt. Beyond that is not taxable. But from exam point of view, this is not that important. Clear? That's it. Provident fund is over. Now, suppose RPF is there. Employee is withdrawing from RPF. Employee is withdrawing. Did he withdraw after 5 years of service? 5 years of service means what? With the same employer 5 years? Huh? No. After joining job, till now how many years you completed? More than 5 years. Now you are withdrawing from RPF. Fully exempt. Sir, I am withdrawing before 5 years. Is there a valid purpose? Valid purpose means what? Ill health, contraction or discontinuation of the employer business, or any reason which is not in the control of my employee. Somehow I got the money without a valid, for a valid purpose, for a valid purpose if I got the money, exempted. Not a valid purpose. Suppose there is no valid purpose, then see, is the amount you withdrawn? No. Have you transferred to another RPF account with another employer? No, sir. Then no, I didn't transfer. Taxable. Or you transferred to pension account? Yes, sir. Exempted. Suppose you didn't transfer. Taxable. Simple. Easy or not? That is withdrawal from RPF. If you withdraw after 5 years, no, it is always exempt. The question comes only before withdrawal. Withdrawal before 5 years. For this 192A TDS section is also there, which we will discuss in TDS revision. Clear? Next. Suppose no, if withdrawal from provident fund is taxable, how to tax it? Employer contribution, interest on employer contribution is taxable under salaries. Employee contribution, no tax treatment. Interest on employee contribution is taxable under other sources. That's it. Simple. Contribution to pension fund, that and all easy. Profit in lieu of salary, nothing is there in this. Retrenchment compensation, not that important from exam point of view. Then VRS. VRS is what? Exemption only. Exemption only. If employee has completed 10 years of service or 40 years of age. Remember, this requirement does not apply to PSU employees. Public sector companies will be there for their employees 40 years age, 10 years, that and logic is not applicable. If they receive VRS, no, least of the following is exempted. How much is exempted? Maximum 5 lakh, maximum actual amount, or 3 months salary multiplied by completed years of service. Yes or no? 3 months salary multiplied by completed years of service, how much? Or salary at the time of retirement, how much you take? Into remaining months of service. If at all this retirement does not happen, how many months of service is that? Check out. That amount you compute. 3 months into completed years into last drawn salary. How much amount you check out? In all these 4, lowest amount is exempted from the amount received. Clear? All of you. Now remember, exemption for VRS is available only one time during the lifetime. It is not multiple times, only one time. If you claim one time exemption, sir, I claimed only 2 lakhs exemption, sir, one time, but statutory 5 lakhs is there, that is irrelevant. Clear or not? Now what is salary here? Last on salary is there, all that. Basic DA for retirement plus commission percentage of turnover. For 5 purposes, the salary definition is same. HRA, RPF, gratuity where act is not applicable, leave encashment, VRS. For all these 5 purposes, salary definition is same. Correct or not? Easy or not? Next. Then perquisites. There are various types of perquisite in this. There's one complex taxable perquisite calculation is there, which we discussed in regular class. It is not required in revision purpose, not that important in exam point of view. Even this comes, it will come only for 4 to 5 marks weightage. Getting it? Which is very difficult to solve. We already seen it. Able to understand? Next. Exemption from superannuation fund. This is also not that required. Tax free perquisites. These perquisite means what? It may be monetary or it may be non-monetary. Monetary means what? Reimbursement or your expenditure employer paid directly, obligation paid to on behalf of you. Or perquisite can be non-monetary. Facility. Facilities are taxable only for specified employees. Reimbursements, your amount I paid, employer paid, your amount liability. These and all is taxable for all employees. Whereas facility is taxable only for specified employee. Who is a specified employee? Specified employee is a person, we have given somewhere definition. Yeah, you see specified employee definition. Who is a director, or an employee who is having substantial interest in the entity, or employee who is drawing per annum more than 50,000 monetary benefits. Obviously, this definition is very outdated. Today, practical, if you see, everybody is a specified employee. In the problem that you're going to get, 99% everybody is a specified. Sometimes to test this, a 2 marks question might be given as a two descriptive questions they might give, 1 mark each. Like that, they will test this provision. Apart from that, there is no testing of this provision practically with the numbers. Clear? All of you. We are about to finish the salary chapter. Another hardly 10 minutes. Okay. Now look at this. There are some benefits which are fully exempt. What are they? Telephone facilities fully exempt. Transport facility provided by an employer to a transport sector employee is exempted. Remember, transport allowance is different, transport facility is different. Transport allowance given to transport sector employee, allowance, optional tax regime, 70% of the amount received or 10,000, whichever is lower. Transportation facility fully exempt. Yes or no? Whether it is default tax or optional tax, doesn't matter. Clear? Next, all perquisites, no, if any exemption is there, they are exempt under default tax regime. Also, optional default tax regime, no differential treatment here. Only per meal coupon alone, 50 rupees up to limit, that is not there in default tax regime exemption. Yes or no? Yes. Remember, all these points will come at later. We will discuss all these points. We'll discuss now. Exemption for LTC, leave travel concession. Very simple. Exemption is given only for travel expenses for the employee on a tour. Travel expenses for the employee on a tour, only travel expenses. For example, company paid, employee tour related one, some 10 lakhs he paid, company paid. Tour must be within India. The travel must be within India. Exemption is available only for travel expenses of individual employee, spouse, 2 children, parents or brother or sister, family members. Correct? You see here, family members means what? Here we have given somewhere. Yeah, you see, the exemption is available only for whom? Employee and his family. Family means what? Spouse, children, dependent parents, dependent brother or sister. In entire perquisites, no, family members means brother and sister included, parents is included, provided they must be dependent. Children and spouse can be dependent on me, maybe independent also, doesn't matter. Dependent means income they don't have, they are depending on me for livelihood. Okay, not dependent means what? They non-dependent means they have their own incomes. That's what the meaning. Are you clear? Next, LTC. What is exempted? Only travel cost is exempted. That too for how many? Spouse, children, dependent parents, dependent brother or sister. Children for how many? 2. Yes or no? That's it. Limit for exemption. How much is exempted? 2 journeys it is exempted in a block of 4 years. Employer has given you travel expense related tour for how many? 2 tours. 2 types of tours it is exempted in a block of 4 years. Right now 2022 to 2025 calendar year is running on. Getting it? So up to March 2025, for you problem will be given on 24-25, and they will give you information how many tours were already completed. Suppose this is 3rd tour, leave travel allowance is fully taxable. Suppose this is 2nd tour. Getting it? Travel cost reimbursement alone is exempted for self, spouse, children, 2 children, all that. 2 children means what? Who were born on or after 1998 only will be counted. If their children were born before 1998, they may not be counted. They will not be counted. Again, children born after 1998, twins, first time, they are considered as 2. First time single, second time twins, they are considered as 2 children only as a whole. Yes or no? That's it. Then how much is exempted? Economy fare in air travel, rail fare, first class air condition. That's it. This is only exempted. Clear or not? Then, sir, company provided medical facility. Next perquisite is what? Medical facility. Medical facility, how much is taxable? How much is exempted? All medical facilities are taxable except following 4. Except following 4. Medical facilities given to whom? By the way, employee or family members. Family means what? Spouse, children, dependent parents, dependent brother or sister. What medical facilities are exempted? Only the following are exempted. How many were there? 1, 2, 3, 4. Only 4 medical facilities are exempt. Rest all other taxable. Medical reimbursements, everything is taxable. Following, what are they? Reimbursement. Remember, a medical treatment provided to their family in employer hospital. Straight away treatment in employer hospital fully exempt. Sir, employer hospital, it's not employer hospital, sir, but outside hospital, company bear the expenditure or company is reimbursing the expenditure. Then it is exempted only if the treatment is in government hospital or a local authority hospital, or if the treatment is for specified disease in any hospital approved by Commissioner of Income Tax, or it is for COVID-19 treatment, provided COVID-19 positive report is required, treatment related bills and all is required. Okay, 1. If at all company is reimbursing you the money or company paying directly to the hospital, the amount paid is exempted only if it is a government hospital or for specified diseases or for COVID, yes or no, or medical treatment abroad. Abroad medical treatment means what? For abroad, no. Employee or family member, somebody suffering from some problem, company is bearing the entire expenditure. That expenditure is exempted for medical treatment up to the limit permitted by RBI. Travel and stay also up to the limit permitted by RBI is exempted, provided travel and boarding expenses and traveling and boarding expenses are restricted to only the patient and 1 attendant. Yes or no? That too, traveling related reimbursement is there, right? Medical treatment outside in traveling reimbursement, that is exempted only if the gross total income does not exceed 2 lakh. Typically speaking, for all employees it is taxable. But sometimes in exam only medical facility they will give you where this point may be tested specifically on that. Clear or not? Yes or no? Now sometimes companies might take premiums, okay, for health insurance of the employee. Company might pay premium, okay, or they will reimburse you for the health insurance policy you purchased. That is fully exempted. Remember, if a company is giving you medical allowance, fully taxable. Medical allowance is fully taxable, no exemption at all. Medical reimbursement, these 4 types of reimbursements are exempted. Apart from this, company might take personal accident insurance where maturity amount will not be there, exempted. Suppose company is paying life insurance premium where maturity amount will be there. Life insurance premium company is paying on your name, fully taxable. If on the employee name, company is paying life insurance premium where maturity amount will be there, that is fully taxable. Personal accident insurance, only if the employee he will get, family members get, so it is fully exempted. You see, that's what, if an employer takes personal accident insurance and pays the premium, no benefit is provided, therefore insurance is exempted. However, if employee LIC policy, life insurance policy is taken on his name, which is not an accident insurance policy type, where some benefit he will get tomorrow if at all he is alive also, that is fully taxable. In one of the test your knowledge problem, it is there. Clear or not? Yes or no? Then perquisites which are taxable only for specified employees. Specified employee what? Facility is only taxable. Yes or no? Now let's cover RFA. Let's understand RFA discussion and HRA discussion both. HRA what? HRA, suppose no, I am receiving HRA received 10 subsection 13A only under optional tax regime, it is exempted. How much is exempted? Actual amount, how much check out? Okay, rent paid minus 10% of salary check out, 50% of salary in case of Delhi, Mumbai, Kolkata, Chennai, 40% of salary if the house is taken on rent in another city, other cities, correct? One condition, in that city he should not have a own house. He should not be claiming SOP benefit. Correct or not? That's it. So salary means what? Basic plus TA for retirement plus commission percentage of turnover. Easy or not? Now this is HRA. By the way, here salary is there, right? Suppose, you know, I am receiving HRA from April month to September month. For these 6 months HRA I am receiving. Salary should also be considered only for these 6 months. Sir, April month salary is paid in May, sir. May month salary is paid in June, sir. June month salary is paid in August, sir. Like that it is there, sir. What about that? That is irrelevant. When the salary is paid, salary of this month is paid in which month? That is irrelevant. April month salary, how much? That only you should take. September month salary, how much you should take? Only that only. Are you getting the point? In ICI book, test your knowledge question. First question is the important question. Very best question that you solve it. Clear? That's it. RFA is, HRA is over. Now RFA. Everybody, I'm telling you, 99% of the students, they do mistakes in RFA computation. For RFA computation, there is a simple decoding. First to know, furnished, unfurnished, leave all that. Leave all that. First calculate, look at the question. Identify what employee is getting. He is getting furniture, sir. He is getting house also, sir. Then look at who is the employer. Who is the boss? Government is the boss, sir. Government is giving the benefit. Now look at, is the property owned or rented by the government? Check it out. Is it a hotel or not a hotel? Check it out. Sir, it's not a hotel, sir. It's an accommodation given by government. Then straight away license fee determined will be value of the house given to you. Is the value of the house given to you. Okay. Compute answer K. Suppose value of the house, license fee, some 10,000 per month. 12 months the government gave you. You stayed 12 months. Then 12 months you should compute 1,20,000. Sir, I stayed only for 4 months, sir. Then 4 months only it should be computed. Able to understand? Then suppose, sir, government gave me a hotel, sir, accommodation. Then 24% of salary or actual rent for the hotel, whichever is lower, that much is the outer column. Fine. This is accommodation perquisite value. Sir, along with this, I was given furniture also, sir. I was given furniture appliance. If it is given, compute the value. If it is not given, 0. Sir, furniture is given, sir. Then look at whether the furniture is purchased by the government and then gave you. Purchased by employer and then gave you. Yes, sir, he purchased and then gave me, sir. Then 10% per annum of the original cost of the movable asset. Remember, laptop facility is always exempt. Remaining any other furniture is taxable at 10% per annum of the original cost. That is treated as perquisite value. Sir, company hired on rent, sir, then they are giving me. Rental expenditure is a benefit given to you because you are getting a benefit. Now, total accommodation 1,20,000, furniture whatever value, you will get the gross perquisite. Remember, this is not taxable value. This is value of the perquisite I got. How much is taxable? First, you should solve like this in the exam. First, compute gross perquisite. Just now we computed. Minus amount recovered, reduce it. Then you will get what? Taxable amount. Are you getting it? Suppose if the employer is a private sector employer, not a government employer, but other than government, then more than 40, suppose employer owned, so or else we'll take here 3 categories were there: rented, hotel, owner. Rented 10% of salary or actual rent, whichever is lower. 10% of salary or actual rent. Before amendment, no, it was 15% of salary up to 31st August 2023. But for 24-25 year exams purpose, this percentage is enough. No need to remember. ICA book itself does not talk about before amendment. Students are unnecessarily looking at old amendment and new amendment and confusing, not required at all. Getting it? Suppose if it is hotel, same as government. So compute that value. Sir, employer owns, sir. Then look at the population in that city where you got the accommodation. More than 40 lakhs, 10% of salary. 15 to 40 lakhs, 7.5. Any other area, 5% of salary. By the way, salary means for which many, how many months? Accommodation is occupied by SSC for 3 months. Then for 3 months only salary you should take. Which 3 months? Jan, Feb, March, employee taken, sir, accommodation. Only those 3 months related salary only you should take. Salary means what? Basic plus DA for retirement plus every allowance only taxable portion. Correct? Under default tax regime, taxable portion generally will be full. Under optional tax regime, taxable portion can be some amount because exemptions were there. Yes or no? That's it. So now you compute like that. Suppose, sir, furniture is also given, sir. Furniture valuation rule is same. Government employee, non-government, no variation at all. Same valuation rule. Look at here, same. Then you will get total benefit value. What is the total benefit value? Minus, did employee recover? Did employee paid company any amount? Did company recover any amount? Recover. Then balance is taxable. Now here, there is most important point. Subsequent year valuation rule. What is this? Subsequent year. Sir, in 23-24, I got accommodation, sir. Perquisite valuation is done, sir. In 25-26, I am continuing the same house, sir. Employer has given me, allowed me, I am staying in the same house. Then there is a maximum limit on perquisite valuation. Generally, many interpret it as second year we should compute perquisite like this. Wrong. You should compute in second year also the same way. Second year also you should compute the same logic. But one checkpoint you should do. Checkpoint is what? Value of perquisite in the 23-24, how much checkout? Previous year, how much is the perquisite checkout? Index numbers they will give you. Cost inflation index numbers they will give you. Of the 24-25 amount, how much checkout? Number. First year you got perquisite, no? Or 23-24, whichever is later is there, right? That number you take. How much value you are getting? How much value? Sir, I am getting some 2 lakhs at this value. Sir, this perquisite value is 1.8 lakh only. As per the rule, it is 1.8. Since it is less than 2 lakhs, no need to apply that provision. 1.8 lakh only perquisite. Yes or no? Sir, as per 10% of salary, 7.5% of salary, hotel accommodation, all that, no? I saw it is coming somewhere around 2.5 lakhs, sir. In the second year. First year it is 2 lakhs only. In second year, how much it is coming? 2.5. Because in second year, my salary increased, sir. That's why RFA value also increased. But perquisite value shall not exceed indexed value. Perquisite value shall not exceed indexed. As per the indexed value, how much it cannot exceed 2? How much as per the main rule? 2.5. But since it is less than 2, I will restrict the valuation to 2 lakhs. This is a benefit. In subsequent years, remember first year your salary will be low. But subsequent year, as you grow further, your salary will be increased. Automatically, RFA valuation also will increase. No, same house I am saying, but you are increasing value of the house. It should not be done. It should be increased only to the extent of inflation. That is the logic. It shall not exceed. Getting it? So this is only a checkpoint. If at all the value you, by the way, this checkpoint is applicable only for non-government employer. Yes or no? So first compute 10% of salary, 7.5%, 5% of salary, or 10% or actual rent, whichever is lower. In case of rented, all that you compute. Remember only accommodation value. Furniture value should not be considered. Furniture value should not check here. Accommodation value you check. In the second year. First year, how much is accommodation value? Check out. Second year value increased. Then immediately you should apply this logic. If the second year value, first year value both are same, no need to. If second year value increased, then you should apply this logic. First year value multiplied by second year index number divided by first year index number. How much that value? Your perquisite cannot exceed that. Already computed value is less than this, no problem. Computed value will be the perquisite value. Correct? Once again, listen to this if at all you don't understand. Clearly told. Getting it? That's it. Now, first year means what? First year means what? In which year you got accommodation? Check out. Sir, I got in 9-10 years, sir. 23-24 year or 9-10 year, whichever is later. Nothing but if accommodation is given long ago, now you are staying. 23-24 accommodation value, how much you check out? Multiply by index number. Sir, accommodation itself I took first time in 24-25, sir. Then first year means 24-25. Clear? Now first year 24-25 means 25-26 onwards will be second year. Second year onwards you should apply this logic. Correct or not? Then finally, If accommodation is given to a judge of a high court or supreme court, they are fully exempted under optional tax regime. Under default tax regime, it is fully taxable. Then car. Can I proceed? Easy. Just another 5 minutes, it will be over. Almost 1 hour. We are finishing within 1 hour. You see, day before exam, many students will have a worry how to finish. Very simple. 1 hour and finishing salaries chapter. PGBP will be another 1 hour. Capital gains will be another 1 hour, 3 hours. Remaining all other chapters will be put together 4 hours, 8 hours, 7 to 8 hours. I'm revising entire book without leaving one point. I'm in fact explaining, not revising. I'm explaining. Yes or no? Next. Car perquisite. What is car benefit? Very simple. You see here in the book I have given you, if everything is employer, orange color. If employees, then purple color. Getting it? Car. Very simple. Company gave a car. They are only bearing expenses. Simple logic. They are only bearing expenses. Car is given for you for official, fully exempted, fully personal. Then car comes under use of movable asset, 10% per annum of the original cost in case of it is a own car. If it is a rented car, rental expenses plus actual expenses for petrol, diesel, all that. Yes or no? That's it. They're official and personal. Then deemed perquisite value. What is deemed perquisite value? Office and personal. Company owned car, company is only bearing up to 1.6 cc, 1800 per month or part of a month is the deemed perquisite value. Remember, 1800 per month. Per month means calendar month. Sir, I received car on 16th July, sir. 15th August only I used. 15th August I returned to company. It is considered as 2 months. July you got, August you got. 2 months it is considered as. Able to understand? Not day to date, month to month. Getting it? Now, driver is also given 900 extra. Sir, more than 1.6 is the car engine capacity. 2400, 900 in case driver is provided. Sir, suppose no, company is owning the car, sir. Employee is bearing expenses. Means only for car benefit should be taxed, right? Both official. 600, 900. That's the only difference. Sir, company, car owned by employee, sir. Employer is only bearing expenses, sir. You can see here. Expenses are met by whom? Employer, sir. Fully official, sir. Fully exempt. Fully personal. All whatever expenses incurred. Sir, both official and personal. Look at what is the actual expenses minus what is the deemed value for official purpose. Actual expenses, look at minus deemed value for official. Official purpose deemed value, how much we assume? 1800 per month or 2400 and 900 in case of driver. Suppose no, this deduction you felt the more than I spent more, then you need to prove records. You need to maintain records. That's it. For all official purpose, if you are saying you have to maintain records, that's it. Car is over. Easy or not? One more point is there in the car. Suppose if the employee was given 2 cars or more than 2 cars, for 1 car only you will do valuation like that. Remaining all other cars are treated as personal purpose. Same way, accommodation also we have 1 point. More than up to 90 days, more than. Suppose if an employee was given accommodation at another place because of transfer, up to 90 days, both accommodations will value. Any lowest value we will tax it. After 90 days, both will be taxed. That's it. Easy or not? Domestic servant, easy point, not a big deal. Whatever employer facility taxable for specified employee, reimbursement fully taxable for all employees. Gas, yes or no, supplied from company own, then equal to, supplier from own resources, manufacturing cost. Employer is buying from somebody and giving, amount equal to amount paid by employer. Valuation of education facility, reimbursement is fully taxable for everybody. Facility, employer school or employer related school. Getting it? If cost of similar education is less than 1000 rupees per month, no perquisite at all. If cost of education in similar school is exceeding 1000, fully taxable. Correct? Remember, education allowance is fully taxable under default tax regime. Under optional tax regime, 100 rupees per month exemption is there. Correct? That's it. Next, other benefits, interest free or loan. Suppose no, company is giving you loan. Company is giving you loan. Now, at a concessional rate of interest, the year you got loan rate, first date, 1st April, SBI rate is how much you get, rate of interest. For that similar kind of loan, SBI rate of interest how much? That rate minus employer is charging from you only 4%. SBI rate is 10%. Employer is charging only 4% on the loan. 6% is taxable. Suppose you are repaying principal every month. Then every month end outstanding amount you compute. Maximum outstanding monthly balance. What is that outstanding balance at the end of each month? First compute it every month. At the end of the month, outstanding balance compute. Multiplied by 1 by 12 multiplied by benefit interest. Benefit means what? SBI rate minus employer how much is charging interest. Like that 12 months you compute total values perquisite over. However, if the loan is not exceeding 20,000, no perquisite. If the loan is given for medical treatment of specified diseases, no perquisite. Yes or no? Next, food and beverages. Food, non-alcoholic beverages provided to employer fully, they are typically taxable. However, meals up to 50 per meal is exempted under optional tax regime. Default tax regime, it is fully taxable. However, if the food is served at remote work site, fully exempted. Yes or no? And employee was given any refreshments, tea, coffee and all in the office, that is fully exempted. Gift voucher. Gift is exempted if the value is below 5,000. In the institute book it is wrong. They use the word does not exceed 5, means equal to 5. That's wrong. As per the Perquisite rule, you go income tax portal, income tax rule, rule number 3 you open, 3 sub rule 7 you open. Inside that you will find gift. Gift value below 5,000 is fully exempt. Beyond 5,000 is fully taxable. But in ICA book also, up to 5,000 they can claim exemption. Beyond 5,000 they are taxing. Accept ICA practice. Able to understand? But remember, this is about gift in kind. Suppose if the gift is in cash, fully taxable. It is treated as allowance and it should be considered for salary definition for RFA purpose. Yes or no? Then credit card, club and all, remove it. Movable asset. Suppose employee was given any asset for usage. Laptop, fully exempt. Any other asset, own asset, 10% per annum original cost for the number of months used by the employee. Rent, rent expenses per month paid by employer for the number of months used by employee. That's it. Perquisite value. Yes or no? Suppose employee purchased asset of the company. Company own asset, employee purchased it. Company purchased it 10 lakhs. Employee bought it from the company at some 2 or 3 lakhs. Directly you cannot calculate 7 lakhs as benefit. No. Notional depreciation you should reduce. For computer and electronics, remember TV, bike, everything comes under other assets. Just because electronics word is used, don't think electronic means every electronic. Computer and electronic means what? Computer related items. Then deemed value of depreciation, notional depreciation is what? 50% for every completed year of usage. Yes or no? 50 WDV method. Car, 20% WDV. Any other asset, 10% SL. How to compute? Original cost to the employer, how much? Less notional depreciation at rate specified for every year, reduce. Then WDV value will get on the date of transfer to employee minus how much amount employee paid, check it out. Then balance is taxable. Easy or not? Next, other benefits, very simple. Telephone allowance is fully taxable. Telephone facility is fully exempted. Then coming to valuation of specified security, being equity share. Equity share, very simple. If the employee was given ESOP, equity share, other than equity share, whatever it is, doesn't matter. ESOP we have given, you exercise it. On the date of exercising, fair market value is there. That much is perquisite. But year of taxability will be different. Generally, whenever you exercise the option, that time you got allotment of shares, market value is taxable. But in case if eligible startup you are getting ESOP, then taxation is deferred. Taxation is deferred to when? After 48 months it will be taxed. For which year you got? Assessment year, check out. End of the assessment year, check out. After 48 months, that previous year will come, right? Exactly that year it is taxable. Are you clear? Suppose before 48 months you left the company. Then year in which you leave the company, taxable. Before this you sold the shares also, then sale year it is taxable, whichever is earlier. After 48 months from the end of the relevant assessment year or date of leaving the company or sale of those securities, whichever is earlier, in that year it is taxable, not in the year of exercising option. Remember, this kind of facilities there only for eligible startup employees. Normal employees, which year you exercised the option, that year it is taxable. How much is taxable? Market value of the share is taxable. Minus you would have paid some amount to the company, that you will reduce anyhow. Yes or no? Then what are the deductions from salary? 3 deductions. Standard deduction under optional tax regime 50,000, under default tax regime 75,000. Entertainment elements, deduction only for government employees. Remember, entertainment elements is fully taxable for everybody, but for government employee, under optional tax regime only, he will get a deduction 1/5 of basic salary, 5,000 actual amount, whichever is lower. Profession tax, if company is paying it, first it is taxed as salary minus under optional tax regime, whatever amount is paid ultimately is allowed as deduction. Relief not that required from exam point of view. Observations completed. Predominant salary topic is completed in 1 hour 10 minutes. Yes or no? All of you confident? Yes. Intense preparation is required. Okay, it's all about intensity. Everybody will sit 12 hours. It's not how much time you sit, it's with what intensity you sit. That's important. Clear? I think I didn't miss any point. Almost every point I covered, right? That's it. Okay, yeah, take care. The next session will come, we will discuss house property. House road is nothing, 20 minutes or half an hour only. Okay, that's it.